Welcome back to the Real Estate Replay. Today, we're dropping an episode we recorded this summer with my friend, David Friend. David worked at the CFPB from 2011 all the way through 2022. The CFPB, known as the Consumer Financial Protection Bureau, is the agency that everyone's favorite billionaire tech bros love to villainize. But do you know why they want it gone? Because their theory of move fast and break things to make money is a lot harder to do when there's someone around to say, hey, maybe don't break consumers in the process. David's breaking down why this agency was created after the banks literally crashed the economy, what it was actually like working there, and why open banking, something that should have existed years ago, keeps getting blocked by the very people screaming about, quote, innovation. Welcome to the Real Estate Replay, the podcast that says what everyone else in the real estate industry is too scared to say out loud. I'm your host, Wendy Gilch, and this season we're tackling real issues impacting home buyers and sellers. You know, the ones most real estate companies are too afraid to talk about. Hidden fees, we're exposing them. Shady practices, we're calling them out. And those broken parts of the industry, consider them on blast. Because while everyone else is playing it safe with their polished marketing and sanitized advice, we're here asking the questions that make people squirm. This is real talk for home buyers, home sellers, or anyone tired of being kept in the dark about how this game really works. The Real Estate Replay is brought to you by Housing Rebel because sometimes you need to break the rules to get it right. Let's get into it. I think it's super important that we have this episode today because I think when it comes to the CFPB, Consumer Financial Protection Bureau, you hear from the people who ran it. Mm-hmm. You hear a lot from the company owners and millionaires who got in trouble with the CFPB and why they're so awful and we need to get rid of it. And you hear from some people in the government who may or may not have also been funded by certain companies who also got in trouble with the CFPB and why it needs to go away. So I think it's incredibly important that we talk to someone who was in the thick of the CFPB, looking at what's happening, how it worked, and why they're not the boogeyman. So I have my friend David with me, who I constantly am messaging on LinkedIn, asking him to look at this company and explain to me how they can legally even offer what they're offering and how awful it is. So David, thank you for joining me and helping me educate people on the CFPB. When you worked at the CFPB, what were you working on and what originally drew you to work there?
So I was working on mainly mortgage-related matters, and that's because my background was doing residential real estate settlements and title insurance claims. So that's what I was doing before I even got into the government. I was actually at HUD starting in 2008. So I was there at the kind of the beginning of the fallout from the financial crisis and was working there for a few years. I was just about to the point where I'm like, okay, I'm a little burnt out. Government is not easy work. And then Dodd-Frank was passed. And so as soon as Dodd-Frank was passed, the HUD was not really interested in what I was doing, which was mainly RESPA-related matters. So I had a year until it was transferred to the Bureau to study the Dodd-Frank Act and try to figure out, okay, well, what are they going to have to do? What are the legal things that they're going to have to do? What are the steps that they're going to have to take? And just extrapolating that out, it looked like at least a decade of work from what Congress had passed in Dodd-Frank. So I'm like,
Can you quickly explain for consumers, like
sure.
a general synopsis of Dodd-Frank, which seems like really hard to condense, but.
I mean, to condense it, it was a reaction to what happened in the financial crisis and what lawmakers thought were some of the root causes. So it basically reconfigured financial regulation from a federal perspective to emphasize consumer protection as a separate entity, a separate regulatory entity. Up until that point, it was scattered between 4 or 5 different other federal agencies that had differing emphasis on it. So it depended largely on which regulator was involved. And what Dodd-Frank did was pull all of those functions from those regulators into the Consumer Financial Protection Bureau. It wasn't whole, and it's patchwork, and there's nuances everywhere.
Mhm.
But that's what it did. And then what it also did was it modified some of the consumer protection laws, specifically truth in lending, RESPA, in the mortgage context, to try to address some of the concerns and some of the root causes that lawmakers thought were the basis of the financial crisis.
And what year did you join CFPB? I know you
I
told me this.
joined on the designated transfer date, which was July 31st or August 1st, 2011.
And then how long were you there for? I forget, was it 2018, 19?
I stayed until 2022, if
Oh,
I
okay.
remember correctly.
So now that you have been inside of the CFPB for so long, what's something that most people would not know based on all the shit that's been out there for the past year? What's something you think they wouldn't know is being portrayed to them right now through the media?
So the amount of work that was involved in creating the regulations just gets glossed over. A lot of people think that it's one person decided X and that's what we did.
Mm-hmm.
That's not my experience. I think somebody did an analysis, and there's like 19 steps to get a rule actually completed in the federal government that you have to do, because if you don't do them, somebody can sue you and say you didn't do this step, and therefore your rule is void, and that can be today, tomorrow, or 30 years from now. So it's something where you have to work with a lot of people with different perspectives. People from industry,
Mm-hmm.
people have backgrounds in industry, people that have backgrounds in consumer protection, people that have backgrounds that are just pure economists. They're just looking at the numbers. They're not doing anything else. So it's something where there's nobody that makes an absolute decision. Of course, there are exceptions, but generally, everything would be reviewed by every other department, and every other department could make an edit or a suggestion or a comment or something that you'd have to address. So it was something that took a lot of time, a lot of effort, and was the result of consensus about this is the best way to achieve what Congress intended for the Bureau to do, at the same time to provide information to consumers and protections to consumers that Congress mandated, and also make sure that it doesn't have unintended consequences to adversely affect industry. Of course,
So
there
like
would be
in
effects
general,
on. Yeah, sorry, I'm sorry.
oh, no, you're good. So like in general, how long from like, hey, we need to create a rule to stop this? Like what's an average timeline? Because if you go on Twitter to the haters, they think you guys just like whip something up and don't talk to anybody and put it out there, and then it ruins all the businesses. So like a general timeline.
We did things on an accelerated schedule. We accelerated it as much as possible
Okay.
because we had congressional deadlines that we were trying to meet. But even in the accelerated schedule, you can just look at something like TRID, the integrated disclosure forms that are now that are now used in all transactions, and that took at least 2 years.
And that's accelerated, right?
2 or 3 years, yeah, 2 or 3 years.
Okay.
And so that's the fastest we could go from, pretty much a consensus. Congress said you have to do this, so we're going to have to do this, to going through all the issues, analyzing every single disclosure that's on those forms, putting in context of the statute, putting it in the context of consumer understanding and the research that was existing on how consumers actually use the information in deciding on mortgages, and then testing it again, refining it after the proposal, and getting it finalized.
Mm-hmm.
And then delays after you finalized it, you have implementation delays that came up. So it's something that no matter what you do, it's going to take time if you do it right. So whatever the result, you still have to follow the steps and try to do it in a proper way and not create issues that that weren't intended by Congress.
Right. So let's talk about CFPB because it's painted as anti-business, at least for those that want you gone, that you are completely anti-business. And in your experience, what was the actual goal when you were there at the CFPB? Was it more removing anti-predatory behavior, or is it anti-profit as those claim?
So our charge and everything we did was Congress said this is prohibited, or Congress said this is what you have to do, or this is what you have to say, or this is what you have to tell consumers. You have to manage your escrow account in a particular way for mortgage servicing. It's not anti-profit. We're not there to try to tamp down profit, right? We are there to say that these are the rules you must follow. This is what you have to do. This is what you have to do in order to do business in this realm based on the statutes and the regulations that exist.
Right.
Anytime a new rule is proposed, or anytime a new rule or any changes in the rules are done, we had to do economic analyses. Basically, we would have to analyze, okay, we're going to propose to do X. Okay, based on the data that we have or can obtain, what is going to be the cost to industry versus what is going to be the benefits to consumers versus what is going to be, and what are the potential consequences, right? And what are the ways to do this, and try to find the least costly option that provides the actual benefit that Congress had mandated in the regulation, in the statute. Good Lord.
Right.
So it's something where it's always a balancing act, right? You're always trying to achieve what is legally required, but at the same time, is there a more efficient way to do it? Is there a way that's going to cost a little bit less to business? And that's the analysis. Profit really doesn't enter into that analysis. It enters into it, if the costs are so high that profit becomes, very difficult, then that's something that you have to think, okay, we've got to find a more efficient way to do this.
So what do you think is like the most common misconception about the CFPB that you wish you could just like squash? So for everyone listening right now, what is one thing that I have quite a few when people talk about the CFPB, but like the one thing that is just so off kilter that you would like to just squash right now?
So a lot of times people would rush to an ideological reason. Oh, you're doing it because of X, or you're doing it because you don't like this, or you don't like that. And it's the ideology. We had people of many different ideologies that would debate and that would discuss and that would, say, okay, I think this is more important. I think that's more important. Okay, that's fine. But ultimately the question is, are you enforcing the laws that Congress had enacted? And that's something that becomes, it's a balancing act. It's an exercise in compromise. There isn't one exactly right answer.
Right.
It's kind of balancing the equities and trying to come up with the best decision.
So you guys don't just like willy-nilly be like, man, that person voted for this person. Their company sucks. Let's go get them. Like, let's go right now.
No.
Let's debank them. Let's make everything.
No. That's the issue is the issues like in that are what evidence have you put together? One thing would happen, and then all of a sudden, press would be like, that's the reason why they're doing this. That's where it's like, well, it may have brought it to our attention, but that's not how we do things. That's not how you build a case, develop it, able to survive challenges in court from business and lobbyists and everybody else. So it's something where it's not just a simple calculation. A lot of times people would treat it like, the horse race on the Hill or in Congress, staffers and log rolling, and this person does that. And it's like, well, that might be true up on the Hill. That might be true in Congress. But that wasn't my experience of how that worked at the Bureau.
It's funny, like even the loudest critics on, especially X, they all hang out on X or Twitter, whatever. I will always call it Twitter.
I've avoided social media.
Oh my God, I wish I could.
It's unreliable.
God, do I wish I could. But it's funny, like the loudest people you can go in and see, like, oh, well, their startup got in trouble for like lying about their success rate for their students. Like that might be a problem. Or, they weren't correct on like the loans they were giving out to people. Like that might have
Hmm.
been a problem. And there's never an admission like, hey, like, I don't like them for XYZ reason. But, I acknowledge we messed up in this part. Like, I get it, but I don't like them
Yeah,
for this reason. It never comes
that
out that way. It's,
so
they,
when I was first starting out and working generally in government, most people would understand that. For example, there's regulatory supervision, right? And when you're doing
yeah,
regulatory supervision, the idea is, um, what are you getting wrong, and are there ways to fix it? Are there ways to improve it? And that's why the supervisory process is pretty much secret, right?
yeah,
The idea is that you find out what you're doing wrong and you figure out ways to correct it, right? It's just quality assurance, really,
right.
just a little bit more formalized, so that you have a third party saying, you know, that you
You're
have to
messing
answer
up. Yeah.
to
Fix it.
to,
Right.
to
Fix it.
actually do it right. Um, and so that used to be the attitude that I experienced dealing with business and in business, where something would come up and you go, okay, well, as long as you're trying to comply in good faith, okay, here are some ideas to fix it. Be on your merry way, and we'll just
Mhm.
we'll just check up and see how that's going. Now it seems to be completely confrontational, where you find somebody finds you did something that was a little bit off. Oh, nope, we're gonna fight it. We're gonna fight it, no matter what the
Yeah.
issue is,
Oh,
no
I
matter
know. I
what,
can
we're
think
gonna
of,
we're gonna fight it.
I
We're
can
not gonna
think
get
of it too.
better. We're just
Can
gonna
we
fight
just
it.
talk about them now? Can we just talk about Townstone Financial right now? Can we? Or who's the other one? Oh, Jason Mitchell Group, or there's a bunch of them that, you know, publicly facing, they're like, we didn't do anything wrong. And Townstone's fighting over like $100,000 fine, right? I think in
I
total,
I haven't followed it that tightly,
yeah,
just because it's more fair lending, and that is a very, very, very technical area of the law.
yeah,
That basically they have lawyers who can understand economic concepts related to regression analysis and things like that, to try to figure out if there's any kind of fair lending issue.
yeah. But
Um,
but you said like most companies get a warning, right? Like from the CFPB, like
well,
in a process standpoint.
in a process standpoint, we have to go to them and say, look, this is what we're thinking about. This is what we understand. This is what we believe is happening. You know, let us know what you think,
Yeah,
because we haven't done anything. We haven't kind of sanctioned you or anything else.
yeah,
Um, so it's not like we're sneaking up on people. It's something where there has been some fact finding, there has been some background, there has been some analysis other than just what somebody says,
mhm,
um, to start an investigation.
yeah,
Um, and then once an investigation is started, there's evidence and discovery and everything else. And typically, if you can come to some sort of agreement with the institution,
yeah.
but that seems to be not what anybody's doing anymore. So now everything's a fight.
Hmm. It's
But
weird. I mean, their situation is said, done, and closed. And now with the administration coming back in, who was the original administration that went after them to begin with, now they just want to like wipe the slate. They've already like we've already everyone's moved on, but for some reason he keeps coming back like and not admitting anything. And I just keep thinking like, for those that don't know, like this financial group got in trouble for hosting a morning show that was literally named after their company, correct? I'm pretty sure it was like literally named after their. I know. I feel like you don't want to talk about this, but I
well,
just,
I mean, I hesitate to talk about things that I haven't kind of looked at in a while. I
yeah,
mean, that's part of this, is there was a consent decree, and things get memory hold once you have the
right,
consent decree and the courts approved it, and you move on.
right,
Um, and so, you know, the fact that there was a morning show and somebody said something on a morning show, in my experience, that wouldn't be something that it's like, okay, we're going to hit them now. I did a bunch of RESPA 8 investigations,
Mhm.
and I would see something on LinkedIn and say, oh, you're saying you're going to pay referrals if you send somebody your way. Okay, who are you? What are you? Look at the LinkedIn profile, do this, do that, do everything else. And then you start the investigation. Okay, well, there seems to be something here. What's the next step? Well, the next step is to do analysis. In a fair lending context, that the start of that analysis is HMDA data.
Mhm.
There's a disclosure requirement from lenders that actually have to send in certain data about mortgages,
Yeah.
anonymized, personal identification stripped, just generic information about loans and loan approvals and rejections and everything
Yeah.
else. That's then analyzed. And so you can go to that data and go, okay, well, is there something here? Well, let's look at the data. And you look at the data, and if you analyze the data and say, oh, there might be something here, you're not using a piece of information that's public, right?
Right.
To then say, oh, I've got to I've got to go after this person. You're looking broadly at things. And
Yeah.
by the way, you're not the only one. We're not, you're at the CFPB. They're not the only one looking at these things.
Right.
You're usually busy and trying to accomplish other things. While I was doing working on RESPA 8 cases, competitors are a wonderful source
Oh,
of
I
leads and
can
information for
only imagine.
violative action, for violations of consumer laws,
Oh, yeah.
because competitors don't like to compete against people who are not following the rules.
Oh, absolutely. Absolutely.
So it may not have even been CFPB that saw this. It could have been
Yeah.
a competitor. It could have been somebody in the city that it didn't sit right with them that's what was said on the radio.
Right. I keep going back to, like, if Coldwell Banker hosted a podcast, or I'm sorry, a radio show, and it was called like Coldwell Banker Real Estate, and it was real
Mm-hmm.
estate agents on there talking shit about like the grocery store because it's so diverse, and Hoodlum Weekend, and like certain demographics and areas of a neighborhood, I feel like that wouldn't go over well.
Yeah,
And then yeah,
equal
like
housing opportunity. Yeah,
yeah, that would not go over well. And
it
then
it it would at least when it came to a regulator's attention, go, is this something worth looking into? Well,
yeah.
you might look into it.
All right, I won't go on forever about Townstone.
Yeah, thank you.
I know you're being very careful. Of all the cases, I feel like that's done and closed, and now they want to reopen it,
Well,
which would open Pandora's box of Lord
yeah,
knows.
I mean, I think the latest was that the judge said no.
Yeah, yeah, because I mean that would just greenlight everybody to go back and be like, well, yeah, I agree, we were wrong, they were wrong. I want to redo. I want my money
Well, I
back.
mean, with courts, there's a certain thing called finality of judgment, right? Especially with consent decrees, where okay, courts don't like to. I mean, just at the base level, don't like to add things onto their docket. They're busy enough as it is.
Mhm.
The parties agreed. Everybody's moved on. Okay, why are you bringing this up again?
Can I ask you? You introduced me to a few of your ex CFPB friends, and
Mm-hmm.
a few of us are working on some fun stuff. So, any other ex friends you have that are working on things, you can just bombard them with all my contact information, because the one that we're talking to in my neighboring state is fascinating, and is looking at quite a big lender and their relationships with real estate agents, and um, some suspicious stuff. So any friends you have, please share them my way. Just please.
Okay. Well,
Okay. All right. Let's go
fine.
back to CFPB, and I'll stop talking about Townstone. Walk us through a win where the CFPB really helped people, but didn't get the credit, or people don't even realize that you did it.
I think it's. I mean, we did try to kind of emphasize what we did and what we didn't do pretty well. I think what people don't realize is that the Bureau was doing more than just enforcement. I mean, there are supervisory things where you'd find something that companies were doing, and you go, wait a second, that doesn't really fit into what the regulations or the statute really require. Or you're playing faster and loose with it, and you seem to want to, try to get people to put more money in their escrow accounts than what is statutorily permitted.
Right.
Those types of things would come up sometimes, and they were handled through supervision, right? We identified it. We told them, hey, this seems to be going wrong. We want to see you fix it in this way, or this is one way you could fix it. And things would be resolved from there. So you wouldn't, people wouldn't even know that was done. And there's also a lot of work that we did in consultation with other agencies. There were issues with VA had. I mean, I know it's coming back again, but the VA had some challenges with its interest rate reduction loans. Some of the VA lenders were kind of pumping people to refinance quickly, making promises that you didn't have to make payments, just doing all sorts of really shady stuff. And we helped with that. VA was rightly the one who was doing most of the things in relation to it, because it's their loan program. We had a lot of discussions with other agencies about earnest money deposit theft. What could be done to try to reduce those issues, especially with like spear phishing campaigns and unsecure use of emails, with wiring instructions being sent out with incorrect information.
Do you know that so our group, we don't get involved in transactions. Like, we're basically consumer education. I get them. I literally get like wire transfer. I'm like, what the F is this? Like, I don't know whose list I got on, but whoever put me on there, like, I'm not going to be a very good victim because I don't have anything to send you. So like, it's wild how frequently and how did they even do that? Like, how do they get such I can't talk today, like specific information?
So what it is unsecure use of emails. So sometimes people in the transaction this was 5-10 years ago, people in the transactions would be using emails very, connection, So what people would do is they say that they're from like the title company and send new wiring instructions.
How do they even so they're hacking into people's emails to figure out the who's and whens and the
who's actually engaging in residential real estate transactions. Unsecure use of Google Mail, Gmail was one of the main culprits.
Okay, here's a good one for you, because I know you did a lot of research and education. What do you say to the critics who believe that consumers should just, quote, do more research, quote, instead of relying on the government to protect them?
So really, when you're talking about more information, the problem is, like in mortgages, the problem is information asymmetry is what it's called. And the people that work in that field know a lot more about how those systems work and what our requirements are and how things are done than a consumer who's only going to do it a handful of times in their life. So there's a lot of information asymmetry. As far as consumer protection, a lot of the protections are based on bad things that have happened in the past, that have gotten Congress to actually go, okay, we're not going to allow this. Or, okay, we see more after the financial crisis, we see mortgage brokers that are running from state to state to state to state after they get caught in one state. Well, hey, let's have nothing. We're going to have a registry so that we can track and have a central place where any violations across the country, you can find them.
Which why I mean, so Doug Miller and I always talk about this, how like real estate brokerage services like totally got left out of, unless I know it has to do mostly with mortgage lending, but like there's so many great resources, like even to be able to look up your lender to see if they've gotten in trouble before is like all centralized in one website.
Yes.
Do you know how hard it is for some states to even look up a real estate agent to see if they've been fined before or have
Yes.
been? It is so freaking hard. And I'm
Well,
like, okay, so why can't we have one central database of real estate agents? And even like, and it's not even that, because then you also have like the realtor side of it. Realtor,
mhm.
sorry, I'll never say
Yeah.
that right. I need to add an extra
It's
vowel in there. I
okay.
can't help it. But, like, so there's the state commission board that's, government run, like, and there should be something easily for there. But there's also the realtor side of it where they also find people and get people in trouble. And like, good Lord, like, good luck trying to find
Well,
something like that. Like,
well,
if they got in
it's
trouble.
it's interesting because their regulation is completely different.
Mhm.
Um, they're much more state based. The
Yeah.
reason why a lot of the things I'm talking about are mortgage related is because Congress passed statutes related to federally related mortgages. So, and that's almost all mortgages.
Right.
If that loan is going to be sold to Fannie and Freddie or intended to be sold, doesn't even have to be sold, intended to be sold, it's covered by a federal statute. There is no federal statute on real estate agents.
Right.
The only thing that we have really is RESPA Section 8 mostly.
Right.
So, you know, because it was involving federal mortgages, that's why a centralized database could be created from the federal government related to mortgage brokers.
Right.
Real estate agents are not are not federally over. There's no federal oversight. They
Right.
were explicitly excluded from Dodd-Frank, other than specific federal statutes that do cover them, right? Like
Right.
RESPA. So it's something where nobody on the federal side is looking at it. And as far as realtor goes, it is a professional organization designation.
Right. But like, if you're going to tout all these ethics and rules and how you hold people, like how you're the supreme of code of ethics, like, then show us the people that aren't following it so we know not to use them, but then your memberships drop and then nobody. So there goes the money train, and that's the end of that.
Well, I mean, and it's a trade organization, so its reason for being is to promote the interests of the trade.
Yeah. Well, and it used to be,
trade.
so and I have to adjust my seating here because I'm sitting in my chair wrong and it's driving my hip crazy. So it used to be like, oh, we're in it for consumers and we're in it for home ownership. And over the years, it's like, oh, we're in it for the realtor. So it's like, all right, pick a side. Because if it's not the consumer, then like, I get why you wouldn't show it.
You can talk about these type of trade organizations and a profession. So one of the things, being a lawyer, one of the things is we have trade, American Bar Association and state bar associations. And part of the purpose of the ethics for lawyers is to try to identify those lawyers who are not meeting their requirements, meeting their professional obligations or their requirements. So, and that's not just checking off that I attended a CE.
Yeah. I did a 2-hour conference and
right.
seminar.
Just checking those boxes isn't, that's part of it, but it's not the only thing that you're expected to do and expected to follow in order to be licensed as a lawyer. So it just depends on the trade organization and the organizations. What are the limits? Because the profession is supposed to be, you're making money, but that's not your only role.
Right.
That you have other roles that you have to take into account in order to perform the obligations of the profession. When it becomes just a profit, this is a way for us to maximize our profits by organizing together. Mm-hmm. Then that becomes a little bit more difficult, and really can, it's no longer a profession. It's just a profit-seeking business, and there's nothing wrong with that. It's just
don't expect.
Is it still a profession?
Right.
If you're not thinking about these other things, is it still a profession?
Right. I always look at companies and I feel like my not my favorite thing to do, because that would make me seem like I'm really boring. Maybe I am. I'm really boring. I love to look at like what companies say to consumers. Like there's one brokerage in particular who's running their mouth so hard to consumers about like how awful things are when they sell their home and why they're fixing it and doing it right. But then when you turn around and you look at their earnings script and it's like it's not about the consumer, it's profit, market share. And so I love doing it. I could do it all day long. Like, here's what this company is saying to you. But on the back end, there's one in particular who advertises all over TikTok and talks about how they get sellers more money in their pocket because they don't use a real estate agent and they use this website. And so
Right.
I like followed the little chain here of like who actually owns this ad, who's running it, and where do consumers end up. And it takes you to a wholesaler website. There is no way you're getting more money in your pocket and a quick and easy service that's going to like make you more money than if you sold with an agent. If you're selling to a wholesaler whose whole job is to get you as low as possible and turn around and find someone who will pay more for it. Like those two don't align whatsoever.
The other thing I will say is this has become something that I'm kind of noticing as a consistent theme, just generally in industry. And I wonder when it becomes to the point where with all of the affiliate marketing, with all of the, the shell game of consumers getting passed from one person to another, how long before consumers say, I don't trust any of you?
I would love that for it to be right now. I would really love it to be right now.
The thing is I'm coming from a perspective of financial service regulation.
Yeah.
Right? And really, financial services, a lot of it is trust because it's money and handling money and knowing that your account, the money in your account is going to still be in your account, those sorts of things. But, does it get to a point where you erode that trust? You erode to the point where you're like, well, wait a second. Why am I going to trust you with this? Why am I going to trust you with my information?
Mm-hmm.
And one of the things that I've been watching since I left the Bureau was the open banking rule, which was something that was mandated under Dodd-Frank. How many years later is it now?
Right. Okay. So for
14,
everyone,
15?
explain to everybody, and if we were 5 years old, what
Sure.
that is.
So open banking is basically a concept that you as the consumer have a right to your financial information that any financial institution has.
Mm-hmm.
You have a right to access it. You have a right to control access to it. So, for example, if you wanted to apply for a mortgage, if you've ever applied for a mortgage, you've got gazillion things that you have to put together and send to the lender to try so that they can analyze. Okay, can you afford this? What does your credit look like? Will you be able to repay this loan? Well, with open banking, the idea would be that you, as the consumer, don't have to collect all of this information. You can give a delineated access to that financial institution to go and get the financial information for the accounts that you have. And so that is something that was in Dodd-Frank that CFPB should do a rule for. CFPB did a rule for it. It took 13, 14 years. But as soon as it was announced as a final rule, some industry trade groups sued. Okay. And it was a back and forth. I don't want to get into the kind of the blow by blow of it.
Yeah.
But the most recent thing was the CFPB's like, nope, we're not, we're withdrawing.
After how many years?
15. 15 is when Congress said that you had to do something.
And may I ask, the biggest proponents in Congress, have any of those industry people donated to any of their campaigns over the years?
I'm sure that there have been donations, lobbying, all sorts of things. That's
yeah.
You see that all the time, and
it doesn't
flow by party or anything,
right? But that was the best part of the CFPB is that your funding wasn't, in my opinion, your funding and your missions weren't really ever infiltrated by lobbying to a degree, right? Like
I would never say that. Because
don't burst my bubble.
We have to hear from all perspectives.
Yeah.
Right.
But,
and that's, and we take it, we assume that they're bringing it to try to, further compliance with the law.
Yeah.
And so, we have to listen to them. We have to take it into account. Partially because of information asymmetry, consumers aren't the ones who know what the consequences are for a lot of these things. So industry is the vast majority of comments that we get when we do rulemakings or anything else. So you have to take that into account, and you have to analyze it as best you can. Occasionally, industry will advocate for not following the law that Congress has passed.
Mm-hmm.
And you have to, when you're encountered with that, you have to go, well, Congress said we have to do something, so this is what we think is going to do it. Being lobbied is part of any type of representative democracy, or anything where you're trying to do things in accordance with due process from a government perspective. So you have to at least listen to them.
For as much information as there is about who's donated to what, like, I wish we could know a little deeper. Like, it's just interesting. Like, if you want to follow the loudest haters of the CFPB to see, like, hey, have payday loan companies ever contributed? Because it sure maybe looks like it did for this specific person who's paid it on you for years.
I mean, that's the political side. I mean, from just a regulatory side, when I was at the Bureau, I'd say the ones that are screaming the most were the ones who had never experienced regulation at all.
Mm-hmm.
And so, the banks had, generally speaking, the banks had issues, but, usually it was issues that improved the process.
Right.
Not always, but, generally. But they're used to regulation. They're used to what the give and take is. They're used to kind of how the process works. And that just because somebody found something in an examination doesn't mean that they're saying that you're the spawn of Satan or anything.
Mm-hmm.
So it's something where you're trying to institute a regulatory regime on services and products that have never been subject to financial regulation.
Mm-hmm.
And so there's going to be an adjustment period, I would say.
Okay. Let's go back to let's go forward, looking ahead. Please. What kind of watchdog work do you think is most needed maybe in this administration? Is it lending, real estate brokerages, fintech?
So I think what I'm seeing, at least from a mortgage perspective, is there's a lot of growth in debt. So part of it is, number one, the whole student loan debt basically coming back online for everybody. That's a lot of a hit. There's the proliferation of other debt products, buy now, pay later, paycheck advance loans. I mean, you get into a lot of different mortgage products that sometimes aren't even shown up, that don't even show up on a credit report.
Right.
Again, I'll link back to the open banking idea.
Yeah.
And so you've got a much higher debt burden for consumers. You've got growing, I mean, you've got interest rates that are kind of sticking where they are.
Mm-hmm.
You could go into kind of why they're not going down, but that's way too technical. But
apparently, according to, is it Pulte? How do you say his last name? He's now in charge. Pulte. Is it Pulte?
Yeah.
I can never say it right. According to him, it's all Jerome Powell's fault. And that's why the housing market is the way it is. It's one person's fault.
So to be clear, the Fed chair doesn't directly control mortgage rates.
Yes. Thank you.
Mortgage rates are downflow. So when the Fed changes its rates, it changes the rates that it charges for banks to use its credit.
Right.
The Federal Reserve's credit. And so that does have a cascade effect down the other types of loans. But the most important thing that mortgages are based on is the 10-year Treasury bill and the 10-year Treasury notes. And so that's, or 10-year Treasury notes. And that's something that has much more influence from bond markets. So even if you adjust the Federal Reserve's overnight trading rate, it does not necessarily translate into changes to the 10-year bond.
Does somebody want to tell this guy that? Because he's literally on Twitter. I'm always going to call it Twitter. Take that, Elon Musk. He's just raging that everything is Jerome Powell's fault for the
Well,
housing market. I'm like, oh
I mean
God.
that's political blame, and
I
I'm just like I'm like technically
I
technically
know.
it's the 10-year T bill, and the 10-year Treasury bill has a lot more inputs, including foreign debt, foreign institutions buying the 10-year Treasury debt.
Right.
So it's much more complicated in that it's up to the bond market how those rates flow, and how much they pay for the 10-year Treasury bond at auction, and there's all kinds of things that go into it where the correlation isn't as strong. I would argue that, I mean, back when I was first starting in the mortgage space, you could pretty much draw a direct line
Hmm.
between the two. Well, at least in the last 10 years, maybe, that seems to have been loosening. The 10-year T bill is sometimes lower, sometimes higher. I mean,
Right.
it's kind of more subject to the whims of the bond market. And so, how that works is a completely different macroeconomic analysis. I think for me, the important thing to remember is that anybody who says it's one single thing
Yeah.
that is the result of what's happening in the mortgage market is trying to oversimplify things.
Right.
It isn't just one factor. There isn't just one factor in the mortgage space that causes issues. Increased debt burdens, increased housing prices.
Right.
There are so many inputs into the mortgage market that the only thing that just getting interest rates down would just create an influx of cash
Hmm.
that would result in pricing pressure to increase housing prices.
Right.
So, it's always a balance. It's always kind of balancing different inputs. And it's really what I relied on the economists at the Bureau to kind of sort out and suss out, to kind of figure out, okay, well, with these inputs and with this information and based on historic data, this is what we would expect to happen.
God, we're way over. Holy cow. It's not almost 12:46. Is it really?
I have 9:48, but that's because I'm on the West Coast.
What in the world? Holy cow. Look at us.
Okay,
We went almost 2 hours on this stuff.
Yeah, I could keep on talking. I could keep on
Well,
talking.
I know. Oh, I feel like I'm good. This is going to have to be a two-parter because we had a lot of good, juicy little information on here. So, all right, I'm gonna.
Well, it might edit down better.
Yeah, for like the 6 times I had to stop because my kids keep interrupting me about their zoo. The whole time we have been talking, I just hear rolls of masking tape being like, that noise.
Well, I don't want to. If there's an urgent need to,
There is not.
something.
There's not. It's there. Everyone's alive. Everybody is breathing. There's just tape everywhere. To wrap this up, if you could wave your magic wand and create a law or a rule that would be enforced right now, but we know that's not how the CFP works, and it's not possible. But if it was, what would your rule or law be?
What would be interesting is I've come across other countries and how they handle housing finance and things like that. And kind of being in the whole process and seeing how the process works and everything else, some of the way that those countries handle kind of financing and housing, I think could be instructive. And one concept is, in some countries, you can get a mortgage, you have the mortgage, and basically, when you move, you take the mortgage with you. Oh. So basically, you send in kind of the property information of the property you're buying, how much money you need, and the mortgage company would look at, okay, well, you have this balance left over. We can give you, you'll get this from the house. This is what you can afford, right? And then the people go out, they find the house, and then they send in the information and underwriting and everything else. There's an update of your financial, you provide updated financial information to whatever institution is managing your mortgage, and bam, they come out with a number. You go shop and you send the property information, and they do whatever they need to do to transfer the lien, transfer liens, and do all that stuff behind the scenes. but it's much more of a streamlined process and a straightforward process. And you basically don't have to go through a full underwriting review again.
Okay.
You just have updated information. Based on that updated information, this is what you can afford now. There might be a change to the interest rates at certain step times, and basically you're carrying that throughout the time you are owning a home. And that to me would be an interesting way to approach things, because there would be efficiencies in, you would have some institution that you're working with that you would send your information to that would process it and evaluate it. Then you know what you can afford.
Right.
You'd go out, you do it, and again, you keep on going, instead of a process now where you have to basically send everything every time from the jump, and there's kind of no real way to have any kind of confidence as to what you can actually afford from the lender's perspective, because pre-qualifications and pre-approvals sometimes are not as good as they
accurate
or as reliable as you would hope. And so, you've got a lot of kind of fitting everything together throughout a month, over a month. Whereas you can go to the institution and find out what you can afford at any point.
Yeah. Well, and I think too, if you're buying and selling it, it feels like it would be much cleaner to just keep it going to a degree versus, although there'd be quite a few startups that would probably hate this because it would pretty much wipe their whole business model out. But like, it just, who does this? What country is this?
I'm thinking like some Northern European countries.
Okay.
I think Denmark is the one that I'm thinking of.
Oh, okay.
And there's a lot of kind of back end things that you have to think about.
Sure.
Bondholders and things like that, and how you structure those types of things. But it would seem to be that type of model could be a lot more efficient. Now, this is a pipe dream because there are so many entrenched interests, and there's so many kind of things that you would have to overcome. That you couldn't do it in one fell swoop. You'd have to kind of work towards it over decades.
Right.
But
here I was thinking you were going to say open banking. I thought you were going to say, I'll wait by one, and open banking happened.
And open banking could have been the first step. Because then the consumer's much more in control of the financial information. You don't have basically an industry built up to build up credit profiles for people that are then sold. You could do cash flow underwriting, where you don't have to go through the whole process of tax accounts and bank statements. All that financial information could be ingested by that creditor because the consumer gave authorization for it to be sent.
Right.
And
who is the biggest hater on open banking?
Oh, I would say that the credit reporting agencies probably would not like it, simply because it would be a direct. It could be a way to undermine their business model. Although I don't think that would happen.
Credit reporting is always wild to me because it's like it's a ginormous industry when it comes to the amount of money that they can make from this, and you're like forced into it.
Well, I mean, to me, it's interesting that that these companies have absolute property interests in this, but the people that have no property interests whatsoever in the data are the people who actually generate it.
Yep. It's we'll have to do a whole discussion on that.
All
right.
If it's creating this much economic activity, shouldn't the people that create it get something from it?
Have control over their information?
Get some sort of compensation?
Not have to pay for a credit report or... all right. I'm going to wrap it up because I had no idea we've been talking for 2 hours. And an hour and a half if you deduct all the times I had to leave because my kids interrupted us. Let's talk about, do you ever watch a financial ad or something on social that makes you want to throw your phone because you knew it was breaking 5 or 6 rules? I'm going to guess you see this on LinkedIn.
I would not throw my phone. Okay. So when I see these, the old part of my brain when I was doing investigations and other things
Mm-hmm.
at the HUD and Bureau, and the Bureau would kick in, and it'd be like, okay,
Yeah.
well, who is this? What are they doing? What are they trying to accomplish? What is their business model? Who are they affiliated with?
Right.
Yeah, those types of questions, and what are they trying to do, and how are they trying to do it? And that all gets activated. So I'm just sitting there going, you can't analyze and go, well, you've got an issue with this particular regulation and that
Mm-hmm.
particular regulation and this law and that law. And so I wouldn't throw my phone. It would I just get exhausted. So I avoid them at all costs.
My immediate reaction is to screenshot.
Mm-hmm.
I've said this before. I have this thing called the just in case folder. And if I see something questionable, I screenshot it. And it came in
Mm-hmm.
handy because when MV Realty first came out, I remember looking at their website thinking like, this seems like bullshit. Like there's something wrong here. And I took screenshots of it. And then an article came out from the Tampa Bay Times starting to point out, because they were the ones that originally were like, hey, there's something wrong here.
Was this this was the
40-year listing agreement?
40-year listing agreements. That's right.
Yeah. And so Florida is the first state that I think is like pretty much to the finish line where like in that state, the listing agreements are just done. And I got to send them those screenshots and actually talk to them because they didn't have the original advertisements of what MV was doing.
Right.
And after I sent it to them, they had changed a lot of stuff. Like, so it's nice. So it comes in handy every once in a while. But
Internet Archive is also a good tool.
Yeah.
If you're going to go, if you're looking back at what was on websites and things too.
Right. But sometimes for their social media ads, it doesn't always.
Well, yeah, social media is a completely different animal.
Yeah, but it was before they entered into like discovery and stuff. It was easy to be like, here's what we're looking for. Like we already know this was out there, but it's sad because it doesn't really fall under a CFPB situation. That like it's pretty much
a state contract.
Yeah, and so
state property laws.
Right. So state by state has to go in and go after them. Right. And so there are plenty of consumers that aren't in Florida who are still stuck, like Texas, Pennsylvania, Ohio.
Well, I mean, it's
sad.
And you have to go state by state. And
yeah.
That
and it's
lobbying
sad because
can be difficult.
Yeah.
Because especially if they're real estate agents,
mm-hmm.
there's lobbying that goes on that you have to deal with.
Yep. Okay. And my closing one for all the CFPB haters out there that mostly live on Twitter. What is your go-to example when explaining to friends or family why the Consumer Financial Protection Bureau did matter if there's only 10% left?
Yeah. I'm trying to avoid, I mean, it's still there, but de jure in law, if not in fact.
Yeah.
And so what at least from the mortgage aspect, I would kind of tell people, you remember the movie The Big Short? Mm-hmm. Did you get a headache trying to figure out what the heck was going on? I did.
Yeah.
But I also had to live through part of it and try to figure it out as I went. The CFPB is there to kind of look out for things like that happening. Could it prevent everything? It's never going to prevent everything.
Right.
But wouldn't you like to have people who are kind of like looking at and going, okay, well, this is how industry is going. This is what's doing. What does the law say? Mm-hmm. Right. And try to catch it before it gets to the point where it's creating financial crises and housing market crashes and all kinds of calamities for everyday people. The CFPB, part of the reason it's there is to kind of monitor things. What's happening? Are there things that are problems? Are there things that are not problems? Are there easy ways to address them right now rather than in the future? But the question is, do you want people there who are trying to do that, who are paying attention, and if something is happening, they can do something about it under Congress direction or under the regulations that they've issued? That's basically what they were there to do. Now, if there's nobody paying attention, how much trust do you have that those financial services are going to not blow up again?
Right. Okay. It's almost like setting up guide rails, right? Like in looking for the bumps in the road to make it smoother for everybody.
Right. And using the lessons of past financial crises, past issues in the field to try to, ameliorate or prevent some of those bad outcomes from happening again.
Right.
That's really what it was about.
Did you hear that, people on Twitter? It wasn't the boogeyman. Oh man, well, I can't believe how
it's
long.
More. I would say to people on Twitter, it is more complicated than you could ever think.
Right. Well, they just see the headline and they're like, "Oh yeah, they were debanking people. That's what they've been spending their time on." And it's
that wasn't even the bureau.
And I'm like, there's the whole debanking thing. There's so much more to it.
That was about like money laundering, bank secrecy, and
some of it with crypto,
kind of like regulators saying, "Hey, we've seen banks have a high loss ratio here.
Yeah,
and since we're prudential regulators, we're here to make sure that you guys are not doing crazy stuff so that you fail. You might want to take a look at this, and you might want to be a little bit more cautious about protections for your institution.
Yeah,
if you're acting in this sphere. Oh my God, they're debanking people. It's like,
yeah, there's a risk.
The bank is making an assessment of risk, which is part of what they do. All the regulators were saying was like, hey, we've noticed an uptick in this. You might want to take this into account.
Right, I know, but that doesn't get the clicks and views and the rage baiting on social media.
Well, the whole attention social media dynamic is just it's something I avoid completely because it's not. It's not good for mental health, for one thing.
No, and it's weird too because I make tons of videos for consumer education and just explaining how companies work and things to look out for. And the biggest, and my views have been horrible, probably because I report TikTok ads and talk bad about TikTok Shop and all that stuff. That's probably why, because they know that I'm not pro. But the biggest views I've ever had is like 4 million almost. Because I had a question about a test on my 3rd grade daughter's. She got a question wrong and I didn't think it was wrong. And I literally thought I was stupid and just wanted to know if I was wrong. And it's just a rage bait of like, it's so gross. And it's sad because I'm like, why that gets attention? But I'm trying to explain to you how companies are making money off of you and things to look out for. And that gets like 500 views. I'm like, I don't get it. I know that you do freelancing and consulting. So if people do want to talk to you, what's the best way to get a hold of you?
Well, I mean, you can certainly message me on LinkedIn. That's probably the
only social you're on, right?
And feel free to message me through there. That's probably the best way to get in touch with me.
If you ever, and if you're a company listening who like literally wants to do the right thing and not find ways to skirt around them, I think you would be a really important person to talk to. Versus some other people out there who are like, hey, here's the rules, here's the guidelines, here's how you can get around it and not get sued. Like, I just think if consumer trust is really where we're headed, like you as a company should be focusing on that, not how to get around the rules. I'm now going to go take a bunch of tape off of my carpet and see what kind of zoo I have in my downstairs. So that's it for this episode of the Real Estate Replay. But here's the thing. We know you have stories. The nightmare inspection that got swept under the rug, the agent who ghosted you at the worst possible moment, and the closing surprise that cost you thousands. Whatever shady, frustrating, or downright unbelievable thing that happened to you in the real estate world, we want to hear about it. Send us your stories at sellinglater.com. Because the more we talk about what's really going on out there, the harder it gets for the industry to keep pretending that everything is absolutely fine. Until next time, stay sharp, ask questions, and don't let anyone tell you that's just how it's done. And if you're a provider in the industry who's totally over a bunch of the industry's BS, come join us at Housing Rebel. We'd love to have you. This has been the Real Estate Replay, brought to you by Housing Rebel by Selling Later. See you next time.